Last week became a long podcast. I think it was upwards to 48 minutes. This one will be a lot shorter, but we will, at the end of the podcast, as promised in last week's podcast, get back to the autoboot trader which I'm currently building. And more than that, we will have a look at the top gainers of the trading portfolio, which we've been following for almost 2 years now. I will even show you the biggest losses. Wait just till the end of the podcast and we will get back to it. But it's a new week, it's week 24, and this week there will be consumer price index numbers tomorrow, the inflation numbers, which are expected to come in around just above 4% year over year. And I think it was 0.4% month over month. And on Wednesday there will be Fed interest rate decision. They will start the meeting tomorrow, and on Wednesday you will know if they will hike the interest rates even more or if it will stay put for a pause. Interesting week indeed. On top of that, it's been a good month since January. Markets are pushing upwards. Nasdaq is above 13,000 points. Didn't grow much last week. It was only 0.14% upturn for Nasdaq to 13,259 points. While Dow Jones made a little bit more, 0.34% in the green for Dow Jones last week to 33,877. Tesla totally overbought, and maybe some of you picked up the tip regarding Nvidia last week and saved a few bucks. That small downturn had to come. It was very obvious. You're listening to the StockInvest.us trading tip podcast with Jim, and if you're a new listener, welcome indeed. And for those of you who keep following me over all these years, let's see if we can make it more interesting, as we will get a little bit more aggressive in the trading. I already mentioned the things that will come up this week, because every week we try to look at things that can move the market. So the consumer price index numbers can move the market tomorrow, but I don't expect them to be very off consensus. Even I will be surprised if they come in much higher than consensus, but we will see. They have the potential, and I don't think Fed will increase interest rates on Wednesday. I think they will hold back maybe for a month or two. Just try to settle the market. With this basis and knowing that the buy signals are extremely high, market can just continue upwards. Right now it's actually very hard to see anything that can switch off to a brutal fall, but these things can come out of the blue. And as I warned you before, I think the major thing will be the Ukraine conflict or the conflict which is brewing with China. I warned you about this a long time ago that it will happen. I said that the China conflict would be hot before first half of 2023. So far I am wrong about that, but it is indeed escalating in many levels. These things will change the world. They are changing the world indeed. It's a little bit hard to keep track of how it's changing, because things move slowly. It's a little up, a little down, but in general things are moving down. As I mentioned over and over again, dollar is losing its value as world currency. The amount of trades done in dollars is on a decline, and it is happening all over. We see, and this was, as I told you before the Ukraine war started, I told you there will be a war in Ukraine, and I told you about the consequences of the sanctions politics. When you use dollar as a weapon, you will have a huge downfall in dollar. It just has to be, and now we see it across the board. I like to mention gold simply because one thing I really wanted through all these podcast series was to increase your gains, but most important, reduce your losses, because it's so easy to to lose everything in a single trade. You can just be in a bad stock with most of your capital. They have a bad quarter results, or something really bad happens and half of your money is gone. Probably happened to many of you listening already. Most of you should know that losing is hard. So that to really gain traction in stock trading or investment, you have to be able to reduce your losses. And there is many ways to do this. You probably have a car or a house and you have insurances, and you can do the same thing in the stock market. There are ways to insure your stocks using options, for instance, which we haven't spoken much about simply because it is using gearing, and in gearing you can lose even faster. But there is for sure ways to reduce the risk type of insurance in your stock. Now, as an investment, I said that due to all the uncertainty in the world, with all these wars going, we see a recession creeping in. Germany officially in a recession now. Every country more or less in Europe has huge deficit in their budgets, ranging from 3 to I think 8-9% deficit in the budget. Things really doesn't look good if we go under the hood. Above, everything seems to be floating normal, but there is a lot of things happening, and if these things turn out to be what I think they would be, then gold would be a safe haven. Let's say the world escalates more into conflicts, that the China conflict grows really hot. I can promise you that currency will have huge swings, while gold will not as much. And I think I saw somewhere that if you invested in gold 30 years ago, it's done 70% better than, the dollar had lost 70% of the value compared to gold. So the buying power you had would be much better off in gold. So that was why I was speaking so much about gold, especially over the last year. I think it the last 2 years. As you know, I personally also invested into physical gold and gold shares as a hedge, as a security against uncertainty. Gold had a somewhat okay week last week, up $20 to 1,973, partially driven by the news that the China State Bank is continuing to buying up gold. Now they have passed more than 2,000 tons of gold, and the speculation is that they will tie maybe not the yuan, but the new currency in the BRICS, because there might be a BRIC currency, tie it up to gold to make it more secure. Big things forthcoming, big things that will change the world. Many of these things we've discussed over and over again in the podcast, but I think it's okay to mention one more time. The conflict before, everything was produced in China. Indeed, the West have built up the Chinese power indeed, because we just poured money into China. We let them have high taxes on our goods into the country, and no taxes on their goods going out of the country. Even being subsidized by the government made it impossible to compete with China, and we were happy about it, buying as cheap as we could. Absolutely everything. That means that many of or most of the big industries are heavily dependent on China. We saw this in the car industry when COVID broke out and there was lockdowns and logistic issues. It was impossible to get bumpers to cars, for instance, and then it was impossible to get chips to the cars. These things cause huge disruptions. They are a part of the inflation reason, but they put so many limitations on the business. We have to understand that we cannot produce as cheap as they do in China in the West. Now, all the conflicts with China make China more aggressive on their trade policies, and we see small sanctions here and there on the Chinese trade. These things will cause a disruption in the way we produce goods and the cost of goods, especially in the West, in the year to come. A small example is, for instance, Germany and France. They now look for other countries to produce. Last week I mentioned to you that Apple, for instance, moved the production from China to India to be not so dependent on China and all the conflicts which are ongoing around China. But moving the production to India may not be so safe, because India said that they do not tend to be the slaves of US and NATO pushing for India to have a entrance into NATO, and they said no, it will not happen. They do not want to be a part of that conflict. BRICS getting tighter, more inclusive, can also cause them to put some restrictions on their export, but moreover so is that they are 40% of the world trade alone. Now, if they start circulating more and more goods among themselves, which they already are, and they will increase, that will also have an effect on the Western production. And maybe you followed all the semiconductor issues, knowing that United States now is trying everything to build semiconductor industry inland, not to be so dependent on Taiwan, which is the main center of semiconductor production, but also the conflict point between China and US. So there is a lot of things going on, and I think for sure that the world will change, and we will have to see. Interesting thing indeed is that while inflation target always been 2%, now they say that okay, well, maybe it should be 3% inflation target. That's the target that the Feds and all the bank governments will try to achieve, not increase more than 2% per year. That is an indication that they think that there is no chance to get inflation under control, that it will just keep pushing upwards. The only thing that can push inflation down is a huge recession. What will be remains to see. So far, we know that the debt ceiling was lifted in the United States. They will have till January 2025, I believe, they will have the access to use upwards to, I think it was $4 trillion. And if you go back to previous history, and this doesn't matter if it's Democrats or Republicans, if it's household, anyone that has accessible money tend to spend it, so you can just assume that they will spend the money. And I believe they will spend it in a frantic pace over the next year before the election. One thing is to buy votes, of course, and the other thing is, of course, to keep up their promises from the election. All of these things indicates to me that inflation is not going anywhere. Too much money is being printed, put it into circulation, and that is the one thing that brings inflation up. But we can see more pushes again in green tech. Green tech was super hot more than a year ago or something, and then died a little away. But I think there might be a new upturn in green tech. And now is a good chance to do that, as we see wildfires in Canada, and we see a lot of smog in the major cities of the United States. So pushing that green deal may very well come into the mainstream attention, and that can put attention to green tech stock. So that will be the first stock tip of the day. I think there might be a revolution in green tech, that green tech again will bloom. Now, most of us, we follow the electric cars. These are simple because everyone knows Tesla, and then we have XPELI, NIO, and all of these. And many of these are really hammered. The problem with Chinese cars is that there are still talks about banning Chinese stocks on US markets, delisting them, and that's a huge problem. You do not want to sit in a stock which can be delisted, but still there should be trading options in anything related to green technology. That of course includes solar technology. Last week I told you that the buy signals were very, very high, and usually you will have a correction down when they are so high. But I said at the same time, when being this high, they can just continue to push overs. Now the market didn't move much last week, but still managed to end in green. This week the buy signals are even higher. Across the world there is now 36% buy signals, while Nasdaq went down from 39 to 36. New York Stock Exchange is actually up from 38 to 40. So if you look at America and the US stock markets, the buy signals are in the very, very upper part. And here usually two things happen. Either you have a continuous rally. Just have a look at the Tesla chart. Look how Tesla went into overbought. I think it was around $203, pushing all the way up to, what is it now, $245, 46, $47, all in overbought. This may very well happen to the market. When markets get too optimistic, they tend just to push higher. So I'll not be surprised if we get even higher, but be warned that the risk increases every single day. Now you may ask, so what does that mean? Does that mean that we will get back to a downwards trend? What is the case? No, it doesn't mean that we have to get down to a downwards trend. It just means that there can be a total natural correction. Because if you look at the long-term charts, more and more signs say that we might actually be in a bull market. My prediction was that the bull market would be 27th of May 2023. That was my prediction maybe half a year or a year ago. I just set the date and gave you the reason why. I'm not so sure this will be the case. But very happy to see all the solid support that we have built down to 10,000 points on Nasdaq. Because it means that if we get into scary markets, we should see that the support will hold quite good, and you just need some time. And for the things that can cause the market to really crash, has to be something big. And my guess remains the same, still the same. It's related to all these conflicts which are popping up everywhere when the world again is back into a cold war between the East and the West. And this time it's not just only US Russia, now it is the West really against the East, or the North against the South, depending how you want to watch it, look at it. But it is really building up at fast pace, with BRICS being their own trading segments separating from the world. So this also said that they are dead tired of US international politics, and these groups together, and you shouldn't underestimate their power, their economic power, as China has grown, as I said, because of our neglections has grown insane over the last 20 years to become a true super power, economically and military, sadly also military. Hopefully there will be a bridge someday. As I said, I am a peaceman, despite I have been in Afghanistan, I've been in Kosovo, I've been in Lebanon, I've been several places serving as a mine bomb diffuser. I sadly believe that there will be more problems, but my hope is always the same, that we will see someone start to use the word peace and talk about peace as such, because it's the only way that the world can progress. It will not progress arming up, I guarantee you that. Through all history, arming up has never ever benefited anyone except the war industry and those benefiting from the war industry. And that is why I told you, and I will keep telling you, because this is about stocks, this is about investments, this is where you can make your money. Sadly, there is money, and tons of money, to be made in the war industry, because these things are not going away tomorrow. They will push fat dividends. So if you're looking for dividend stocks, military industry complexes, they will be And if you're lucky, you find one of these companies which still can increase their production. There are huge limitations of ammunition productions right now because you are not able to get the parts that you need, etc. But find someone with that growth potential and you can just harvest money like a farmer harvest 2-3 times per year. There will be so much money to be made in the war industry for years to come. Boeing is one of the companies, and Lockheed Martin, of course, that is really benefiting huge from this. Should be a super safe place to invest your money. Take advantage of the political climate as is. Now oil fell last week to $69, been pushing a little bit up and down, struggled to get a foothold, despite Saudi Arabia cutting their production by 1 million barrels per day. The OPEC Plus oil is not moving as I thought. When it moves a little bit up, there are coming conflict news about China and China having problems with their economy, and then the oil is falling because everything is based on the estimation of future supply and demand. But I remain bullish to oil. I don't think it will go away anytime soon. But lowering oil is good for the world economy, just so you know. So from an investment perspective, we want oil to go down because that will fuel economy around the world. It will keep inflation under check and initiate growth. So we want oil to be going down in general, but still I keep a huge bet into oil-related stocks, and I think it's a bargain at current deals. Gold, as I said, up $20 to $1,973, while the 10-year Treasury yield also went up a little bit last week, currently staying at 3.74%. With all the debt ceiling coming out, the lifted and money, these things has to be turned into hard currency. There will be tons of nice bonds coming out with huge yields. So if you want to reduce your risk and sleep a little bit better, do know that there will be tons of bonds you can buy, yielding very high, nice dividend and interest on your return of investment. So you will easily get, my guess is 5-6-7% in fixed steady income. Might be a good choice if you feel that stock market is getting to your nerves. Now that was a long introduction into getting to the main point. So what will happen this week? I told you Fed will have their meeting on Wednesday. Start tomorrow and will conclude on Wednesday. Consumer price index will come tomorrow, and there is really nothing majorly big happening as we week. Hopefully it will be a quiet week where Nasdaq will manage to crawl into green. But I will not be surprised if there will be some volatility. We will see, but not as much volatility as last week. I expect it to be less than last week. Volatility is good if you're a day trader because that makes for huge swings. When the market is minus down, then up to 2% plus, then down to 1% plus. All these swings are super for trading if you like scalping. End of the week, I think that the market currently is overbought. I will stay very restricted in my views. I find it personally bigger chance that we will have a downturn than an upturn. But remember again, the sentiment is, as we speak, very positive. So to bring the markets down, there has to be more negative news coming out. Market will view a Fed pause as positive. Consumer price index numbers, they can surprise us tomorrow, but I do not think so. Job numbers are finally creeping up. We will know more about that on Thursday. Now 25 minutes into the podcast, and we will look at the trading portfolio. I promised you that I would start summarizing the trading portfolio, which we've been following for 2 years now in this podcast series. Reason why I will summarize it is because we will finally end it. We will get into more aggressive trading and change also the podcast series a little bit in how it's made, how it's put together, and the content of it. Some of you may remember the glorious days of 2022. Markets were falling, but the trading tip portfolio was doing very good. 2023 hasn't been that good. Currently sitting in 3 stocks: Chevron, Medica, and Foot Locker. Last week, these 3 stocks, I told you I would not invest into more stocks last week. These stocks gained a little. Foot Locker was up. I think it was 27 at one point. It fell a little bit back at the end of the week and was more or less unchanged over the week, but while Chevron made for a little upturn, so Medica stayed more or less the same. So this trading podcast, portfolio, which we will end maybe next week or the week after, I will have to have a small break. Next week, actually, I expect the podcast to be delivered on Tuesday and not Monday, by the way, because I will be away on Monday. I'm not sure if I will be able to make the podcast as I will be traveling a bit, but it will be Tuesday. But in general, there might be a week or so off in July. Anyway, we will end the podcast. I will tell you exactly when we end the trading tip part of the podcast. But let's have a quick summary of how it did. I promised you to tell you which stocks, which trades did the very best. And there are so many good trades. Let's start with a simple thing first. I told you over all these podcasts, I said one thing: reduce your losses, increase your gains. How do we reduce your losses? We use trailing stop losses. No matter how good you are, you will not have 100% win rate. Anyone telling you they have 100% win rate is lying. You should aim to do better than 50%. That is what you should aim to. If you're able to do that, reduce your losses, you will have a winning strategy. Over all these trades, we have done, or I have done, 138 trades. 54 was made with losses. 84 was made with profit. Average loss, because we used stop loss, was 2.66%. So I lost, in average, on the trades where I lost, minus 2.66%. In most of these cases, you know that I have a trailing stop loss around 5%. It just means that the stock went a little up and then started to fall. And as the trailing stop loss never go down, it was cut much lower. So losses made for minus 2.66%. Now the gains, it was 84 trades made in profit. They had an average gain of 11.1%. Here are some of the major scores. Week 9 in week 2022. I did a Mullen trade that did 35.8%. And I told you that everything looks like it's possible to do it again. So I did the same trade in week 10. Did 36.1%. And I continued to week 11. Same company. Mullen, by the way, which is totally hammered and may not survive. Did another trade for 22.3%. Then at the same week, week 11, I went into an old-timer, which we've been doing many times in this podcast portfolio. Diffusion made 62.79% profit on Diffusion in week 11. And we continued the week 12 with Sen, 39.9%. Borr Drilling was bought in week 13, made 42.15%. I bought Tesla, been in and out of many of these stocks, but these are the major scores from the stocks. Tesla was bought in week 29, giving 26.67%. Mullen was back on the table again in 43, making 22.78%. NIO was bought in week 43, giving 23.16%. XPEV was bought in week 47, giving 65.75%. Meta was bought in week 51, giving 62.46%. That was the obvious trade. And Mullen again in week 1, giving 43.33%. And the best stock after that it was actually Pinterest, which was closed last week at 10.83. And there is tons and tons of stocks doing anywhere between 10 and 20%. And a few are down at 1, 2, 3% gains. These were the absolutely best buys of last year, making for a super profit last year and also this year. There were a few stocks doing really bad. And if you remember, Netflix bought in week 3, if I remember, gave 12.97%. What happened was that I had stop loss on Netflix, but they had a bad quarter results coming out, and the stock fell more than 30%. And then I told you, from this point, it will just be about rescuing the profit, because I thought there would be a bounce up, expecting a loss. We managed to climb back quite much, but had to sell Netflix with a loss of 12.97%. Now, in week 1, the same thing happened. Then I was in the Fate stock, and Fate had a loss of a contract, causing a super bad opening. I think the stock was down 50%. And I told you back then the same thing. I think that there will be a natural bounce up. I will manage to scoop back some of the losses, but we had to take a 31.54% loss in Fate. And Mullen in week 10, we had to take a 8%, almost 8.7% loss. So these are the absolutely biggest losses of the trading portfolio. And just to repeat it one more time, so what is the consensus of all of this except being very good? Reduce your losses, use trailing stop loss or a fixed stop loss. Whatever your broker offer you is the best way. You will see, as I said over and over again, you will see some of your trades being cut too early. Cut by stop loss just to see the stock move up afterwards. But do this exercise on 10 trades, and I promise you, you will start to see a trend. And when you have done 20 stocks and you look back of it, you will understand why this, using trailing stop loss or stop loss in general, will save you from huge losses. The stop loss will make the decision for you, because the hardest thing you can do is sell. Buying is so easy, selling is super hard, because we are humans, we are made out of hopes. We think it will turn next minute, next half hour. We sit with one loss, and the next day we increase the loss, the third day we increase it even more. And usually when we are so out of hope, we end up selling just to see the stock rebound. Most classical trading pattern there is use stop loss to reduce your losses. Now, let's finish. As I said, 3 stocks remain in the trading portfolio. We'll follow them next week until I say that this is the end of the podcast, as we will move to a more aggressive thing. And I told you already how we will do this. We will use a technique which I started on very early and been mentioning for a long time. We will pick up stocks that have been hammered way too low, and we will do the rebound trades. I think it's a very good time to do that. I think it's where we can make a lot of money. I want to try to repeat it. And playing very safe, because most of the stocks that we bought, yes, the heavy lifters was Mullen, penny stocks like Diffusion Pharmaceuticals, etc. But these, as I told you, we have a portfolio. We had it all the time with anywhere from 1 to 5 stocks at any given time. So it was calculated risk. All of these were very calculated. I told you that we will put a certain amount into this stock, knowing that the risk is high, because the reward can be high. That is why the average of the gains were only 11%, because most of the trades were done in very liquid stocks, good stocks. Now, last week I mentioned to you that I am building a Autobot trader. So for the future podcast, we will do two things. We will follow the auto trader, and you will have my more aggressive trading portfolio as well, where I want to start with a small amount. You are happy to come with comment how much I should start. Should I start with something that you can follow? $500, $1,000, $10,000. You just mentioned the amount, and I will put that in because I want to do how I started trading, how I became in love with trading. So many years back in 1996 was following a certain strategy, and I want to try to see if we can redo it and go a little bit more aggressive. The other strategy is, of course, as I told you, I do not have time for all these trading things. So my goal was always to build a boot, have total control of all aspects of the boot, from signal generation to the actual buying, and so far I'm well on the way. Last week I introduced Mega Shark Trader. I just call it Mega Shark. We might change the name, and you are happy to comment below in the podcast if you're watching on YouTube. If you think you have a good name for this trader boot, because it's currently being built, so you can come if you have a good name, I might just implement it. But for the time being, I'm calling it Mega Shark. If you're listening on Spotify or other audio devices, so this will also be available as video on Spotify also, but also on YouTube, and I'm just showing the screen print of the screen from the trading boot. A few of you contacted me, so how can I log in and create an account? You cannot just yet, and don't be confused about Stock Invest and Get a Graph. Now the trading portfolio is at getagraph.com. This is my playground. It is where I built my things, which I'm testing out to see if they have any user value, and if they have the user value, we slowly integrate it in to the stockinvest.us site. There is no connection between the login details here and Stock Invest. This is a total separate page, and so far I haven't opened for anyone to register or login. I might do it at some point, but this again is just a tool where I put up a lot of things. I look how users react, what they like to use, and what they don't. For instance, you can go and watch candlestick signals and see which companies gave buy signals or sell signals from candlestick on the page getagraph.com. On the screen we can see the administration panel. What I wanted to do is build everything as easy as possible, so it's like super easy to use. And when you see it the first time, you just have to add two pieces of string code. It's your API credentials from the trader, and it will connect to the trader. Then you just have to activate automatic trading. Again, I'm watching Norwegian. I will switch to English. So I will switch to English so that we can see it easy for you to see. Next step is just click the bottom to activate auto trading, which you can see that I have done here. And last week I experienced something which I had forgotten about. If you do too much trading, you can be flagged as a day trader. If you're being flagged as a day trader, your account can be closed unless you have $25,000 on your bank account at the time, and keeping that amount at all time. You have to be above that amount. And I wanted to build this so that you also can follow with a much smaller investment. So I had to start rebuild things a little bit. I have added a button for day trading active, meaning that you can activate and deactivate if you are a day trader. Now, if you're not a day trader, the system will make sure that you are not caught by day trading pattern and your account is being frozen. So it will do much less trades, and I will build more algorithms to make really good stocks. There are some information more on the panel, like you can set the trading amounts that you want to use, and you set of course the stocks that you want. For this I only have Microsoft, Apple, Tesla, Nvidia and Lucid currently ongoing. So this is new. The day trading pattern is new add-on into it. On the view side, and you can watch the view side yourself. If you go to getagraph.com, click where it says shark in the top menu, you can see my portfolio. It's not, I don't think I made it for mobile yet, so you have to use desktop. I might do the mobile version this week. I will just give you a view over, and you can see I write some of the things that I do, like July 7th, I wrote that automating trailing stop loss has been added. I added that. All of this caused a few issues into the system, which I'm still have to solve. I see some trades were duplicated while all trailing stop loss was not set properly, so there is a bit more to do. You can follow currently today. It looks like it will be a green opening because pre-trade is already indicating that I'm up 152, almost $153. You can see which stocks currently are bought. Oh, and I can see that here are some errors. We will fix them. Here is a better view. So you have the stocks that we follow. I made also so you can sort and check the tables for the different trades, look up previous trades, and you can print it, and you can do a lot of things, PDF, Excel, etc. The unfilled orders are the stop loss. These are not executed. When they are executed, they go from unfilled to filled orders. So here you can see there is a trailing stop loss for Apple, 11 stocks at 177.44. If you go further down, you can see that there is another one for Apple at 11 stocks at 178.59. So these has not been activated because, as we saw above, Apple is still active in the portfolio with 44 stocks. Still bugs to squeeze out, and you can go to the very bottom of the page to check out different profits made from it. So you can see that, for instance, in Microsoft there has been realized a profit of $1,290, and Apple has also produced a profit. Please be aware there are some bugs in the system. I will squeeze them out one by one and continue to grow the portfolio. At some point I will invite a few of you to try it yourself if you want to try it. Forthcoming, I think that will be still a few weeks before I will do that. So a few of you who may want to try this yourself. Auto trading boot, you don't have to put in actual money because you can open a paper trader account just to see how it works. We will get back to that. Now, 43 minutes podcast, it's time to end it. There is things to do. It's a beautiful day here in Vilnius. I hope you have a very beautiful day. I hope you will have good trades this week, that you will be able, as always, to put some greens into your bank account. And when we speak next week, you are better off than you were this week. Until next week, just have a good week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.